Hi everyone. Now we're going to do a question of entering the following transactions in the books of Surya Enterprises. The question is given here. I'll just read out the question. Purchase goods worth rupees 8,000 from Sangeet on credit, January 1, 2011. Remember, we are recording going to record the transactions in the books of Surya Enterprises. That is the first sentence in the question, after which comes these sentences. The second transaction is on January 7. Neha purchased goods worth rupees 4,000 from Surya Enterprise on credit. January 15, received a check from Neha for rupees 4,000. January 16, payment made to Sangeet rupees 8,000. January 20, purchased goods for cash rupees 10,000. January 22, goods sold to Kavita for rupees 15,000 and trade discount at 20% allowed to her. January 25, payment received from Kavita by check in full settlement of her account. January 30, sold machinery for cash rupees 5,000. January 31, paid rent rupees 3,000. With this we come to the end of the question, and we are going to record the journal entries for these transactions. We have the columns for journal entries. We have a date column, particulars column, a ledger folio, a debit and a credit column, and you give the title journal entries of Surya Enterprises 2011. Our first transaction is purchased goods rupees 8,000 from Sangeet on credit. So for credit purchase, the journal entry is purchase account debtor to Sangeet account 8,000. Our second transaction is Neha purchased goods rupees 4,000 from Surya Enterprise on credit. Remember, we are writing the journal entries in the books of Surya, and when Neha purchases from Surya, for Surya it is a sale. So the journal entry is Neha account debtor to sales account 4,000. So remember, always we record it from the perspective of the business. For this journal entry, for Surya Enterprises, this purchase by Neha is a sales. That is why we are recording it as Neha's account debtor to sales, and the narration is being credit sales to Neha. January 15, the transaction is received a check from Neha for rupees 4,000. I have already told you that check received is equal to cash received, and therefore 15/1/2011 check received is equal to cash received. So cash account debtor to Neha's account 4,000 is the journal entry. Narration being check received from Neha. The next transaction, that is on 16th, is payment made to Sangeet rupees 8,000. Sangeet account debtor to cash 8,000. The next transaction is purchased goods for cash rupees 10,000. So the journal entry for cash purchase, you give the date 21/2011, purchase account debtor to cash. Purchase is an expense, so it should be debited, and cash outflow happens, so cash is credited. Our next transaction is on 22nd. See, goods sold to Kavita for rupees 15,000 and trade discount at a rate of 20% allowed to her. So first of all, you should have an idea of what a trade discount is. A trade discount is given by the supplier when the customer buys, in large quantities. In order to promote the purchase, the supplier will be giving discounts to the customer in order to promote the purchase. So that is 20% trade discount is given. So 15,000 into 20% makes to 3,000. The discount is 3,000. So the purchase or the sales made to Kavita. The sales made to Kavita is 15,000 minus 3,000, because 3,000 is given as discount. The net sale is only for 12,000. So the journal entry is cash account the journal entry is Kavita's account debtor to sales account 12,000. 12,000 because even though the amount is 15,000, a trade discount of 20% is given. 15,000 into 20% is 3,000. So 3,000 discount is deducted from this 15,000. So 15,000 minus 3,000 is 12,000. And then we have the journal entry for credit sales, Kavita's account debtor to sales 12,000. See, the narration is being credit sales with trade discount of 20%. Our next transaction is on 25th, that is payment received from Kavita by check in full settlement of her account. We know that in the previous journal entry we have already written the transaction with Kavita is for rupees 12,000, and that account is settled with a cash check, means that the Kavita has given a check of rupees 12,000 because the business dealing is for 12,000. So a check is received for 12,000. Check received is equal to cash received, and therefore cash account debtor to Kavita's account. Cash account debtor to Kavita's account 12,000 is the journal entry. Then our next journal entry is on 30th. Sold machinery for cash rupees 5,000. So when you sell machinery, you get cash. There is a cash inflow. That is why cash is debited. Cash account debtor to machinery account 5,000. Then next is paid rent. Rent is an expense, so expense will be debited. So 31/1/2011 rent account debtor to cash. When you pay rent, there is a cash outflow. So cash account is credited. Rent being an expense, it is debited. So 31/1/2011 rent account debtor to cash account 3,000. With this, we have recorded all the journal entries, and in order to have a screen, a one picture view, just a one view, I'm also giving this. You can just take down to a notebook after understanding the same. Thank you, and I hope it's clear for you. Thank you.